That's supposed to be the music. Greetings and welcome to ITR Live. I'm your host, Chris Hagenow, and we are back here, or at least one of us is here, in the Hendrickson Library at the Center for the Preservation of Western Civilization. John actually is not here in the library. He's in his office, but we've got another special episode of the Gold Standard in Iowa Conservative Entertainment today. We also have Tom Sands with us in the virtual studio. So, Tom and John, welcome.
Thank you.
Thanks, Chris. Good to be here.
Tom, what are you doing here?
I'm just sharing my expertise and enthusiasm on protecting the taxpayer and trying to develop better tax policy for the policymakers as we go forward.
Great. Well, I've told you this many, many times in the past, privately or in small groups, but, as president of Iowans for Tax Relief, I take most of my cues on what I have to say on tax policy from Tom Sands, and I always have. It's been about 20 years now that early on in my legislative career, it was just follow Tom, and it'll all be okay. So here we are, but I appreciate you being here and helping us out. The reason today that I wanted to get the two of you on is you had authored together an article that's on the ITR Foundation website about the expiration of the Tax Cuts and Jobs Act. And I think we're starting to hear more and more about that, especially nationally, because that's going to be a hot topic for the next Congress. But what is, you guys are trying to take a look at what that might mean for Iowa. And I guess I'll start off, Tom, where are things at with the Tax Cuts and Jobs Act? When does this become a must-do issue for Congress? When do certain things expire, or do they expire? Can you kind of frame up the state of play for the listeners about where things are at right now?
On the expiration of the Tax Cut and Jobs Act, it's a hard stop for most items that affect individual or pass-through entities on December 31st, 2025. So it's really tax year 2026 is when this becomes imperative, and we do not need Congress to wait till December of 2026 to make everything retroactive. We really need this next Congress to take actions on extending the Tax Cut and Jobs Act. There are a few provisions that are already starting to phase out, but the big ones become a hard stop December 31st, 2025.
And explain briefly, well, not briefly, I don't know, however you want to say it. It's not just changes to the federal tax code that happen, but it will in turn impact the tax law in Iowa, right? I mean, we've married ourselves to this in many ways, correct?
Correct. We being the state of Iowa, start both on the corporate filers and the individual filers, or pass-through filers that pay on the individual basis or as an individual filer, with federal taxable income. And so anything that affects federal taxable income, which obviously the Tax Cut and Jobs Act will in some areas, will automatically affect Iowa taxable income in mostly a negative way if we do not extend the Tax Cut and Jobs Act. And one of the big things that most people would notice as far as individuals is the standard deduction, because that affects every taxpayer. And of course, no matter what you might hear on TV, the biggest recipients in percentage-wise would be the low to middle-income filers. So it's imperative for all Iowans that we do this. They do this.
Right. John, I'm gonna turn it over to you. I kind of feel like I missed the boat here at the outset, so this is where, John, you can tell me that I kind of messed it all up. But Tom, John, you guys, but Tom, your background and why you are an expert on these things and why I defer to you on so much. I don't think we set the stage on that very well, but you were just your legislative background, your personal background, and how you've developed the expertise that you have on tax policy.
Yeah, I served.
And then I'll let John take it from there.
Okay. I served 14 years in the Iowa House, and 12 of those 14 years I was on the Ways and Means Committee, and 4 years as the ranking member, which means I was the lead Republican when we were in the minority. And then the last 6 years of my career, I was the chair of the House Ways and Means Committee. So I made it a purpose that if there was parts of the tax code I didn't understand, I tried to learn as much as I could and understand on how tax policy affects Iowans. And it really comes down to something pretty simple, whether you try to strengthen government or individuals. And I always thought the country was based on the principle that it's for the people and not for the government. So that's where I start with most of my tax policy. John?
John, you take it away.
Yeah, well, I want to just say, Chris, I echo what you said. I've learned a lot from Tom over the years, and I first got to know Tom when I was working at the think tank down in Mount Pleasant when we were on the campus of Iowa Wesleyan, and I first met Tom. In fact, we were on some panels together at the college arguing on some conservative issues, and often he and I were the lone conservative voices on campus, but over the years, I mean, I've learned a lot from Tom on tax policy and understanding the Iowa budget. So it's great to have him on board as our senior fellow in tax policy. I mean, so it's great to be working with you, Tom. And I just want to echo what he said about the Tax Cuts and Jobs Act, because it is important. I mean, it's probably one of the big issues looming out there, because it's providing a lot of uncertainty for businesses, but also for individuals, because one is we don't know what's going to happen, because we have to wait to see how the election turns out. Who's going to win the White House, and who's going to get control of Congress? Are we going to see a situation where if Kamala Harris and Tim Walz win and the Democrats get control of the Congress? I think we're going to be in very big trouble. And it's going to be a very difficult situation. And then if we have divided government, it'll be a sticky situation. And so that's the uncertainty. But as Tom was saying, if the provisions are allowed to expire, the standard deduction will go back to the pre-2017 levels. The individual tax cut rates that benefited. I mean, there's a myth that goes on that says that this benefited most of the wealthy, and that's just not true. It benefited a lot of middle class working Americans, as well as small businesses, as we know in Iowa from a lot of testimonies that we've seen, and so it's going to create a substantial tax increase for a lot of people, both working individuals and small businesses, and then. We can get into some of the more technical specifics on here, but this will also have impact on the state as well. And this is one of the big question marks, because we're not quite sure how this will impact the state, but we do know that already that the Iowa economy is a little rocky because of the ag situation. We know the national economy is not in the best health with inflation, and there's all kinds of global uncertainty with we still have wars going on in Europe and the Middle East, and so we have that international instability. And so if you add on a pretty substantial tax increase, that's not going to have a good impact on the economy, and of course that will impact states, and that will in turn impact revenue as well. And so that won't be a good situation for Iowa, nor will it be a good situation for any states as well. The other thing that I think we need to consider is that a lot of times, when we think about small businesses, and a lot of times it's unfortunate, but a lot of times when we talk about tax policy, there's a lot of class warfare that comes into it. And so, tax cuts for the rich, and we hear that all the time. We're hearing that all the time on a lot of these political ads, especially for those on the left. But it's those small businesses that are some of the big employers in Iowa, especially in rural parts. And those are the people that that really benefited from the Tax Cuts and Jobs Act, that were able to expand and create new jobs and offer bonuses. So this is why it's so important to either renew them or make them. I would prefer just make them permanent. The other thing I think, and then I'll turn it back to you, Chris, but the other point I want to, frustrating point, I guess, for me, is you hear all the time policymakers and economists say, well, we cannot renew the tax cuts because they cost X amount. It's going to cost the federal treasury, X amount of dollars, and it's going to create deficits. Well, the fact of the matter is that the tax cuts actually brought in more revenue to the federal government. And the reason why we're running deficits, it's not because of the Tax Cuts and Jobs Act, it's because we cannot control our spending. And so we continue to spend massive amounts of money. That is creating massive deficits. I mean, we just hit another milestone of basically close to a $2 trillion deficit. And it's not because of the Tax Cuts and Jobs Act, it's because Congress can't get its act together and restrain spending.
Yeah. So, kind of, I think this is going to be a statement that I mean for it to be a question, because I want to, Tom, I want to get you to speak to this. And it's sort of the other half of what John said about the Tax Cuts and Jobs Act actually increased federal tax receipts, which is something that, we philosophically believe happens to a certain level as, you get more economic activity. And started out with this question, I think some time ago, John and I were talking about it here in the office, is, okay, if we have these coupling provisions in Iowa that are with the federal tax code, if that expires, how does that impact state tax revenue? And if I'm being too simplistic about this, let me know. But, on one half, there are certain deductions and expensing that falls off, and so that creates additional tax being paid, which at a very basic level you might think would increase state tax receipts, but on the other hand you get the negative economic activity out of it. Is that just an unknowable thing to know what that would do to Iowa? And so we should just, as your article very clearly says, yes, you're going to have the negative economic activity. We know that. But, I mean, can you speak to that somehow, kind of where that's all going?
It's a great question, and that is going to take some time to really dive into the intricacy of how we link the two tax codes and just what really will happen on some of that stuff. But from a very general sense, we know this. We do know that when the Tax Cut and the Jobs Act was passed, that economic growth and revenue from the federal level and from the state level has grown. And so it is fairly safe to make that opposite assumption, that if it automatically is all left to disappear, then the reverse will happen. So, and possibly at a greater level than the economic activity growth that we saw at the beginning, just because there's so many other headwinds out there facing the federal economy and Iowa's economy. So there's probably more unknowns than knowns on the intricacies, but I think one can make general assumption. And the other thing is, whenever you're taking money out of individuals or businesses' pocket and giving it to government, it is a discouragement discouragement. It hinders the economy, because government never can generate business or products like individuals, and they automatically just takes more money to actually even run the programs they want to run, as well as delay them. So I think it is a very safe assumption on the broad part that it will have a discouraging and a negative effect on both the federal and the Iowa economy.
And Chris, if I could just add on that, I think Tom's absolutely right, and I think we can just look at history as examples, and looking at past administrations where you've seen where you had Congress passing tax reform measures, whether it was the Bush tax cuts or the Reagan tax reform measures, even though he was a liberal Democrat, even the Kennedy tax cuts in the 1960s, or my favorite, the Coolidge tax cuts and the Harding tax cuts in the 1920s. All those had very pro-growth economic effects versus when you look at other times when there was tax increases. Same thing at the state level, and just do a comparison of the states that are actually making pro-growth tax reforms versus those states that are increasing taxes. And just seeing the implication on revenue for those. And I think there's one reason why Iowa is doing pretty good right now compared to other states, because we've been doing a fairly good job of restraining spending, or at least slowing the growth of spending. And whereas other states, I mean, look at Minnesota. They just blew past an $18 billion budget, or a budget surplus. I mean, they've increased spending almost 40%, and that's going to come back to haunt them really quick. And that's why you have places like New York and Minnesota, Illinois that are in their financial basket cases right now, because they can't control their spending. And there's only so much you can raise taxes in order to address that, and you just drive your people out, you drive your businesses out. And that's exactly what's happening in Minnesota. No one wants to admit it, but they're losing people.
Yeah. I think that
tax Wisconsin even.
Yeah. Oh, and I look, it's I think it's fairly clear that the direction that Iowa's going, and that we're setting a great example on how to do these things. Tom, from the article, I wanted to give you a chance. A lot of times we talk about individual income tax, property tax, things that are more specific. Well, not the property tax. This was specific to individual taxpayers in Iowa. But there's some provisions in the article that I think are important, that are a little bit more on the business corporate side. You point out that the cut to the corporate tax rate, that's permanent in the Tax Cuts and Jobs Act. So that's a good thing. But I wanted to give you a chance, because I know a lot of folks, their eyes kind of glaze over when we talk about business expensing and QBI, and those don't always mean a lot to folks out there. Can you speak to you're good at explaining these things in a very simple way that everyone can understand. Can you, not only what those things are, but why they matter to Iowa's economy?
I'd be happy to. And the one I'll start with is QBI, the Qualified Business Deduction, or Income Deduction. That was the federal government's way to lower the small businesses' income tax rate. So, in other words, instead of just having to file their income tax on the individual filer's side, this was a special deduction for qualifying businesses that actually give them a bigger boost by keeping basically a 20% more of their hard-earned income. And that is very important for businesses, because those are dollars that they can reinvest. They can either grow their business, they can add additional benefits for the employees they have. They can not only expand their business footprint, they can also expand their business by adding employees. And a lot of this, not all, but when you look at the state of Iowa, is out in rural Iowa. Now, it's also happening in the bigger cities, but it is sometimes the only employers in rural Iowa in our smaller communities. And that's our biggest lifeline for property tax growth, for adding kids to our schools, I mean, you just go right down to it, and it's the biggest lifeline that rural Iowans have for jobs is the small and medium-sized businesses that are out there. So that was very important, not only to the businesses, but to the communities that they serve as well. The other big one that hits both small business as well as large business, and this one has already started, is what people talk about bonus depreciation or full expensing. The reason that becomes so important for businesses as an option is if it disappears, you have one option, and you depreciate your qualifying expenses out. So if you're a farmer, you build a grain bin or a machine shed, or if you're a small business and add a capital purchase in equipment, then you can depreciate that out over the lifetime of the economic lifetime of the equipment. Or with the bonus depreciation, you have the option of fully expensing that the year of the purchase. And quite often, businesses will make their big purchases on years that they have more income and cash flow coming in. So by expensing that fully, or at least having the opportunity to make that management decision of fully expensing that in the years of their high income years, it saves taxes for them. It can save interest money because they're not going to the bank and borrowing the money as much money. Quite often will buy additional capital assets that they may have to put on the back burner if that full expensing isn't out there. So it's actually a stimulating economic growth area to have that full expensing option out there. And both for big business and small business. And so that is something that is phasing out now, but it'd be very important. It's probably the biggest bang for the buck for business is to reinstate that full expensing option.
Yeah. No, I'm glad, and that all makes sense. I just think it's important that folks understand. I mean, we want people to be focused on what impacts them, because that's sort of the foundational principle, right? But these issues, whether it's the corporate tax rate or expensing, yeah, they do matter to Iowa's economy, and they matter to Iowa's economy a lot, as you said, because of just the nature of our economy, and that can have a big impact on all of us together. So I appreciate that. I wanted to spend, and I'm going to ask you guys to kind of put on your, I guess, prognosticator hats. This election's real close. We really don't know who's going to win. We could have a Republican trifecta. We could probably not, but potentially have a Democrat trifecta. We could have a split, president one party and a. I think we have a sense of, if you had a Republican trifecta, that you probably get a lot of these provisions reinstated and maybe even some additional benefits, just that's something that Republicans seem to be campaigning more on. But if we have divided government or even a Democrat-controlled government, they're still going to address some of these things. So what do you think, for example, is it maybe the standard deduction that we get something, done on? What should we look at? I'll start with this. Regardless of who controls Congress and the White House, what provisions can we reasonably expect to see action taken on in the next Congress? That's for both of you. Yeah.
I can give one that I think that is most likely to survive no matter who controls the White House or Congress would be the standard deduction. Because if that is left to expire, that's basically a tax increase on every taxpayer out there on the individual side. If you have divided government or controlled solely by the Democrats, I would think any business incentive will go by the wayside.
Okay. John, any thoughts on that, or maybe what you would expect to see in Republican control?
Yeah, if Republicans control, I would see if President Trump and Senator Vance win and Republicans get control of Congress, I would say the whole thing gets made at least renewed or made permanent, and then eventually some other things will be done. In fact, President Trump is even talking about bringing the corporate rate down to 15%, and I think you could see some additional pro-growth tax reforms come out of that. So I would be more optimistic on tax reform if Republicans get control of Congress and the White House. Now, if the Democrats come in and take control of everything, I'm very pessimistic because how left-wing they've become. I do agree with Tom that I think if that happens, I do think that you probably might find some agreement on the standard deduction, but I do think maybe some of the rates will get kept on the lower end, but others will. You might even see a reversal. I know we said the corporate is permanent, but I would bet that President Harris and a Democratic Congress would jack up the corporate rate more. The other thing I think is what we'll see is, regardless of who's in control, because both parties have basically endorsed it, you'll see an expansion of the child tax credit. I think that'll be a part of it as well. And you might even see, and this may be being too optimistic, you might even see like the 20% deduction going into play, because that came close to passing, I think, Congress, and when you had the sort of the small business package that was trying to work through, and you had various groups that were on board with that, because you do have some Democrats that are supportive of that. I think like Senator Ron Wyden in the Senate has been supportive of that. So you might see some bipartisanship on that, but with divided government, you might see more of that versus if the Democrats are in control. Because if they control everything, and as I said before, Chris, and I don't know if I think if you have Harris and Walz in office with a Democratic Congress, we will see the most radical transformation of American government since Franklin Roosevelt. And it's not just in terms of economic policy. I think they will transform government because they're not going to waste their majority. And you know, we're seeing what they're doing at the state level in many cases in California and Minnesota. So, and they're moving very left on economic and social policy, and that concerns me.
Mm-hmm.
In fact, Chris, if we, and I try not to think about a Democrat trifecta, but if speaking strictly from tax policy, if we did see a Democrat trifecta, I do believe some form of the standard deduction would survive. However, I would imagine it would survive with a more progressive income tax code, as well as maybe an increase of some. I think we would definitely see an increase in the corporate rate, and possibly some increases on the individual side on their rates as well. And they've been campaigning on issues like unrealized gain on capital gains, which is, well, I can't use some of the words that come to my mind.
Yeah,
it's one of the worst ideas I have ever heard of, and how you could even implement something like that is un-American.
Well, yes, it is, and I might add, not only is that unworkable and probably unconstitutional, but we talk about tax increases being disruptive to the economy and their negative economic impact. I mean, imagine how disruptive, if they could somehow craft that language and implement it, how disruptive that would be to the entire financial system. in this country. I mean, the breadth and the depth of how that would change financial decisions, investment decisions that Americans make is staggering. And I try to comfort myself that I think they're smart people on the left understand that is nothing more than a political statement trying to win votes because they want to tax, the very richest Americans. But it's just horrible. It's not. I don't even want to call it policy because it's so out of bounds that I don't even think it merits the name policy. But I'm glad you brought that up because it's something that troubles me as well, Tom. One other question similar to that. Are there any provisions in the Tax Cuts and Jobs Act, and maybe you haven't really thought about this, and that's fine if you haven't, that need to be jettisoned or really need substantial revision? Or is it all just a list of things that should be retained or improved?
Well, I think, and I don't know if Tom will agree with this one, but it's very controversial, and on both parties you see different positions taken. That's the SALT deduction, and the SALT cap. I think under the Tax Cut and Jobs Act, it's $10,000, I believe. I'd have to go back and look, but anyways, basically what that does is it disguises high tax states, and it basically rewards high tax states, and so that's a problem area, I think. But yet you see even some Republicans and even defending SALT and wanting to restore that fully, and so I think that's one problem area that needs to be addressed. But I mean, there's a lot of there's Republicans from New York and high tax states that are defending that, so I don't know if that will ever be addressed.
Yeah, I would agree with John. That particular issue doesn't fall along party line. It follows directly on geographical areas and how your constituents are affected. And from my perspective, from a pure tax policy, there probably needs to be a limit. What that limit is, I don't know. But it'll be interesting, I think, to see how that shakes out, no matter who wins.
Yep. Well, good.
Chris, could I bring up one more point? Because I think Tom brought up an excellent point to kind of bring it back to include property tax in this as well. I know we're talking about Tax Cuts and Jobs Act, but I liked when he said the lifeline for rural Iowa, when he was talking about the growth in small business. I think he was absolutely right in that, and that just shows how important property tax reform is also to rural Iowa. And we often look at it from a homeowner's perspective, but we also need to realize how important property tax relief is to business owners as well, and that it is a growth issue. And so that's why, this is just another angle to look at property tax relief, is that, it's important for rural Iowa because a lot, like Tom said, it's those small businesses that are the lifeblood of that area, of that region of our state. So I thought the way you said that, Tom, was great. It's a good way to look at that issue as well from that perspective.
Yes.
Good. Anything else, gentlemen, before I kind of wrap things up?
I heard Art Laffer, who's been sort of kind of an advisor to former President Trump, talk about, the possibility of a flat tax at the national level. And I'd really like to see that, but I bet that would be very hard to achieve. I mean, that's, we've had those debates before, whether it's the national sales tax or the Steve Forbes flat tax. But it'd be very nice to sort of move in that direction. But I think that would be very hard.
It would be great. The closer they can get to that, we all benefit, as well as the government as well, with economic activity. I agree with John. It'll be really hard for them to get much closer to that, but maybe they can. The last couple things I can think of that need to be said, in my opinion, is we hear a lot about the cost. And Chris, I think you were the one that mentioned this before, how tax cuts affect the cost, or how much they cost the government. Well, if they are not extended, it costs every taxpayer out there. And that's really what the real concern is, and where the real economic growth is. And just because some of the liberals have invaded the economist arena and have become a lot more partisan, it doesn't make them any more accurate. And if anything, it probably makes them less accurate and less credible, because it's political partisanship that is driving their theories, and not data necessarily. And the second thing is, no matter which side of the aisle you're on, but maybe no matter which side of the aisle you're on, before you can have good, effective tax policy, it's always on the spending part. And I hope our next Congress and president take a real hard look at our deficit and our government spending, because it is time to trim and slim down the federal government. It has grown into something we no longer can afford as taxpayers.
You're absolutely right. I couldn't agree more with that. Tom's absolutely right on that.
Yeah, I agree, Tom. I think that's sadly, I'm pessimistic that we will find the political will to do that at the federal level anytime soon. We've done it in Iowa. We have absolutely, and it's a project that you and I were in on in the early years of making sure that we balanced wants versus needs in the state budget, and so that we could do these sorts of tax reforms down the road. And it would be lovely if the federal government could follow that example.
If I could just say one more thing, Chris, and that is just a good reminder of yesterday, the Cato Institute awarded for the second time in a row Governor Kim Reynolds being the most fiscally conservative governor in the nation, gave her an A rating as the top governor. And she also received the 2024 Distinguished Service Award from the Tax Foundation this year. And so we truly have a taxpayer's best friend as governor. And so we're very fortunate. For me, it's just been exciting seeing our governor. I mean, she was honored by Governing Magazine, and now getting top honors from Cato and from the Tax Foundation. And so it's really exciting. And Governor Reynolds and the legislature has done a really good job of doing pro-growth tax policy and some good spending policies, and because it could be a lot worse. Look at our neighbors to the north. I mean, Tim Walz came in dead last.
Yeah, I was going to ask you, who was last on that list,
yeah.
John?
And he's increased spending almost 50% and increased taxes close to $10 billion.
Yep. Well, like we say over and over, we are proud of the Iowa experiment, and how instructive that's going to be for the rest of the country, and we'll keep talking about it because we think that we've shown the path forward for this country. So, all right, gentlemen, I think that's about enough for today. Thanks for joining us. Thank you, listeners. Don't forget to like and subscribe and tell your friends. And with all of that, we will see you next time on ITR Live.